So stocks retreated last week as inflation advances. For those of you watching here this morning, the markets have continued to retreat here today on concerns about COVID variants. I've been in communication with Tom and the team. We are watching. We are ready to act when it is prudent. But before we get into today's weekly market update, let's take a minute to talk about inflation and the real rate of return on your money, as it is an important personal finance concept to understand. The real rate of return is the rate of return on your investments after inflation. The real rate of return indicates whether you are gaining or losing purchasing power with your money. So with inflation checking in at a 5% annual rate, does that mean any investment with less than a 5% rate of return is losing purchasing power? Well, that's where it gets a little bit complicated. In theory, any investment with less than a 5% rate of return may lose purchasing power. But the financial markets are giving mixed signals about how long they expect inflation will stay at its current level. Fed Chair Jerome Powell has indicated that the inflation numbers we're seeing won't be long lasting and can be attributed to improving economic conditions. In the end, the real rate of return is only one factor to consider when building a portfolio. Your time horizon, risk tolerance, and goals are the primary drivers. We are constantly looking to determine whether inflation is here to stay or whether it may start to trend lower. If inflation is starting to worry you, please reach out. I would welcome the chance to hear your thoughts. So with that, I'm going to roll today's intro and then give you my recap of what happened in the markets last week.
Life is too short to worry about what the next headline could do to your life savings. Hi, my name is Eric Hagan, and I keep my thumb on the pulse of the economy and the markets so my clients can focus on the things that are actually important to them. Thank you for joining me the next few minutes on today's weekly economic video update.
Despite a good start to earnings season and some solid economic data, worries of slower second half economic growth led to a pullback in stock prices last week. The Dow Jones Industrials Average fell 0.52%, while the Standard & Poor's 500 lost 0.97%. The Nasdaq Composite Index sank 1.87% for the week, and the MSCI EAFE Index, which tracks developed overseas stock markets, was flat. Stocks weakened amid an active week of news, including two important inflation reports, congressional testimony from Fed Chair Jerome Powell, a string of economic reports, and the start of the second quarter earnings season. The earnings season began on a strong note as 95% of the first S&P 500 constituent companies to report checked in with earnings above estimates by an average of 22%. Despite these above expectation earnings, stocks moved little on the results. Bond yields continued to trend lower amid Powell's testimony that monetary policy would remain unchanged. A decline in consumer sentiment fed worries of economic slowdown, leading stocks lower and cementing losses for the week. The Consumer Price Index jumped 5.4% in June, representing the biggest monthly gain since August of 2008. The core CPI, which excludes food and energy, increased 4.5%, which was the fastest pace since September of 1991. The CPI report was followed by the Producer Price Index, which surged 7.3% from a year earlier, outpacing May's jump of 6.6%. Higher wholesale prices were primarily attributed to increased commodity prices and labor costs. Fed Chair Powell, in congressional testimony subsequent to these reports, reiterated his position that the accelerated inflation of recent months will be temporary. Remember, later on today, I will be sending out our full weekly economic update. If you're not getting this and you would like it, head on over to our website and you can subscribe there. In this update, you'll find companies that we're watching for their earnings reports, financial data that we're keeping an eye on. Plus, we have a riddle for you and a quote as well.
Hey, this is Eric again. That's it for today. Don't forget to subscribe before you leave. Here at Capital Consulting Group, we provide personal wealth planning and fiduciary investment management solutions for individuals, couples, and families. To learn how to see your entire financial situation, both today as well as every year into the future, go to clearfinancialfuture.com and watch the short 2-minute video. To learn how we give our clients' life savings the attention it deserves and to see how we're doing, visit smartmixportfolios.com. And lastly, if you'd like help investing your 401k at work, visit me over at 401kinvestmentpros.com. Thank you again for your time today. I'll look for you next week.